Good morning, traders. My name is Adrian from BCR, and I'll be bringing you the latest insights and key levels from the market. The instruments we'll be looking at today are the dollar index, spot gold, USD JPY, and AUD USD. Let's dive right in. First up, we've got the US dollar index. The US dollar strengthened across the board ahead of US trading session, with the US dollar index briefly breaking the 107 levels following geopolitical headlines involving US Russia tensions. However, traders remain cautious as negotiations between Riyadh and Moscow on Ukraine-Russia peace deal continue, influencing market sentiment. The DXY is currently hovering above 106 levels as investors await key economic data later this week. Despite initial gains, the dollar struggled to maintain momentum, weighed down by last Friday's weaker than expected US retail sales data. This has fueled speculation that two potential Federal Reserve rate cuts this year. From a technical perspective, the DXY remains under pressure after losing its 20-day simple moving average and falling to a year-to-date low of 106.62. The 14-day RSI confirms weakened momentum, while the MACD suggests a sustained bearish trend. On the downside, key support levels to watch are 106.62, followed by 106.45 and 106. On the upside, a break above 107 could lead to resistance at 107.52, with further gains potentially pushing the index towards 108. Up next, we've got spot gold. Gold prices surged to a two-day high of around $29.37 per ounce, despite a mild rebound in the Gene-back index and rising US Treasury yields. Concerns over renewed tariff tensions, fueled by US President Trump's threat of reciprocal tariffs, have driven demand for safe haven assets. Spot gold fluctuated in early Asian trading, holding near $28.98 per ounce. While Monday's US market session was light due to President's Day holiday, gold remained supported by trade war uncertainties and expectations of central bank demand, with predictions pointing towards a potential rise to $3,000. From a technical standpoint, gold remains in a bullish trend. The daily chart shows consolidation above key moving averages, with the 14-day simple moving average providing support at 28.68. The 14-day RSI, currently at 68, has retreated from overbought levels but remains in positive territory. On the upside, though, the initial resistance is the previous all-time high of 29.42, followed by 29.60, and the psychological level of 3,000. Conversely, a break below 28.77 could lead to further downside targets at 28.68, 28.36, and further downsides at 28.34. Up next, we've got USD JPY. The Japanese yen retreated after reaching a one-week high against the US dollar, though expectations of an imminent Bank of Japan rate hike may limit further losses. A narrowing US-Japan yield gap, driven by rising government bonds in Japan and declining US Treasury yields, is also providing support for the yen. During the Asian session, dollar yen recovered from the 151.25 level as the dollar gained slightly. Investors reacted positively to the delay in President Trump's reciprocal tariffs, weakened demand for safe haven yen. However, strong fourth quarterly GDP data and hawkish BOJ expectations continue to support the yen, making significant depreciation unlikely. Technically, the USD JPY remains under bearish pressure after falling below key support levels, including 152.82 and the 200-day simple moving average at 152.67. The 14-day RSI remains in negative territory at 41, suggesting downside momentum. Resistance is seen at 152.67 and 152.82, with further selling opportunities at 153.75 and 154. On the downside, though, immediate support lies at 151.25, followed by the critical 151 range. A decisive break below 150.9 could expose the psychological 150 level. Lastly, we've got AUD USD. The Aussie dollar paused its three-day recovery as the US dollar strengthened, though it managed to stay above the 0.63 levels, despite the Reserve Bank of Australia's rate cut. The Australian dollar initially declined following the RBA's decision to cut the official cash rate by 25 basis points down to 4.1%, marking its first rate cut in 4 years. The move was widely expected, though, driven by signs of slowing inflation, with fourth quarterly consumer price index data showing weaker than expected price pressures. However, the Aussie dollar found support after President Trump delayed tariffs and US retail sales data disappointed, increasing expectations of a Federal Reserve rate cut later this year. On the technical side, the Aussie dollar remains in a bullish trend, trading above the 0.6340 levels with an ascending channel. The 14-day RSI stands at 61, reinforcing the positive outlook. On the upside, resistance is at 0.6390 with a key psychological level at 0.64, with a further resistance at 0.6423. On the downside, support is seen at 0.6310, followed by 0.63 and 0.6254. Well, that's all for today, traders. That rounds up today's market analysis. Thanks for tuning in. Don't forget to like, share, and subscribe. Also, if you have any further questions, then don't hesitate to leave a comment below, and I'd be happy to answer. I'm Adrian from BCR, and as always, good luck with your trades.